You might have the right trade that Bitcoin's going up to 100K in 3 months, but if you have 10x leverage, if it drops 10% before then, you're going to get liquidated and taken out of you.
안녕하십니까, 블록미디어 시청자 여러분. 오늘은 디라이브라는 온체인 옵션 마켓에서 활동하고 있는 프로젝트를 만나볼 건데요. 오늘은 디라이브의 닉과 함께 저희의 블록미디어 연구원이신 HJ님 그리고 저와 함께 팟캐스트를 한번 나눠보도록 하겠습니다. 그러면 시작해 보겠습니다. Okay, hello Nick, how are you doing?
Doing well, thanks. Thanks for having me on.
Yeah, HJ, how are you doing?
Yeah, I'm good.
Yeah, maybe I think we can go right through the questions since I did a brief intro in Korean. So first on, could you introduce yourself and about Derive, but in one sentence to someone has never traded options maybe?
Yeah, so I'm Nick. I'm the co-founder and CEO of Derive. We're the largest on-chain options exchange. Options are kind of these derivatives or contracts where you can trade and speculate, protect and hedge your position on an asset, or earn money, earn yield from the price action of a certain asset like Bitcoin, like commodities, like equities. They're one of the biggest markets in the world, and yeah, they're very, very useful.
Okay, so I think a lot of Korean retail traders already know about spot and perps because they usually trade on Upbid, and for perps, maybe they trade on-chain on Hyperliquid, maybe Binance. And with perps, one bad night means a liquidation, like every position, every money has gone. So how does an option treat that same bad night differently, maybe? Could you explain more about it?
Yeah, so there are two types of options that kind of make up the whole market. There's calls and puts. Calls give you the right but not the obligation to buy an asset at a certain price at a point in the future. So if you can think about like the Bitcoin 100,000 strike call, it means that you have the right to buy Bitcoin for $100,000, maybe expiring in 3 months in the future. So in 3 months, you can buy Bitcoin at $100,000. That's only valuable if Bitcoin is above $100,000 in 3 months' time. So it lets you express that bet very precisely. The way that you make that bet is you pay money for that call, and that call might trade at like $100 or $200. So if you pay $200 and you buy it for $200 today, for the next 3 months, that bet is locked in. You can't get liquidated. It's you lose your whole premium of $200 if Bitcoin is below $100,000 in 3 months. But if it's above, you kind of win your bet, and it can go down before, and it can finish higher, and you're still in. Whereas with the liquidation on perps, a lot of the time, you might have the right trade that Bitcoin's going up to 100K in 3 months. But if you have 10x leverage, if it drops 10% before then, you're going to get liquidated and taken out of your position. So options allow you to be more specific, more precise with a bet and with a trade. The trade-off is you have to be right within the time frame that you specify, whereas perps, you can kind of just sit there for a while.
Okay, so right now I'm holding XRP and BTC for long term, not selling, just sitting on it. So is there a way my back can earn something using maybe options, maybe any like strategies?
Yes, and I guess there's a caveat in that you have to take a market opinion. You have to have an opinion on like where Bitcoin's going to go, or Hype's going to go. Like let's take Hype as an example. It's I don't know, like $55 at time of recording. You might think, okay, there's no way that Hype is going below $40 in the next 2-3 months. If you take that opinion, you can sell puts or put spreads, which effectively cap the maximum downside loss, and you can play around with the different strikes and the different expiries. And I would guess off the top of my head that you might look at making something like $11 a year selling those puts, which is roughly a fifth of the price of Hype. So you can take your Hype, sell the downside, and collateralize it with Hype. and you can earn like 20% in US dollar terms on your hype position. You can earn $11 a year on that. Similarly with, the upside, you might think, I think hype is, going to run to $80, but I don't think it goes above $80 this year. You can sell, the 80 strike call, and you can probably earn 10 to 15% doing that, and still getting all of the upside up to $80. And so like, you have to have an opinion. So you are giving up stuff. I think a lot of people try and get people to make bad financial decisions or trades that they don't understand. Like, you have to take an opinion of like, hey, I think it's going to do this, or I think it's going to do that, or I don't think it's going to move at all. And you can express that in a bunch of different ways. And you get paid to put that trade on. And it really is the end game state of yield for a lot of these assets that aren't stable coins. So it's why like, traditional finance options are so massive. If you think about like, where can you get yield on Bitcoin? It's a big problem for a lot of people right now. There's just no yield anywhere. And that's true of most equities and most stocks. And the reason is like, no one's really paying to borrow that thing. It's only like done for short selling in traditional finance. And that's sometimes very valuable, but usually for like lower quality assets or special situations. So for most assets, most of the time that are high quality, you just can't get much yield on it. It's certainly not more than like a few basis points. And so that's where options come in, provided that you have, an opinion.
Right now in the crypto scene, I think perpetexes are massive, as you can look up for hyperliquid and also lighter. And also lending is massive, like Aave or maybe Morpho. But the on-chain option sector, I think it appears to be, it has like received relatively less attention. So why do you think that? What's the reason of it? So looking at how large do you expect the on-chain option market to become, maybe?
Yeah, I think this has been true in finance for like the whole of history since options were invented, but particularly since they became big in the 70s. For like any new asset class, options are like the last market to develop. It goes spot trading, then futures trading, then options. And the reason for that is, to go back to what we were talking about before, you need to have a lot of like long-term holders of an asset who like are bag holders, want to earn yield, and like have sophisticated opinions on, kind of where the asset might trade. And those are the guys who really bootstrap the market by selling and trying to generate yield, selling options and trying to generate yield. So for me, like, we just haven't had that for very long in crypto. There's been Bitcoin and ETH for, those markets really started to take off in 2019, 2020. Hype, probably the most recent asset, which fits that criteria, which we launched, and we're still the largest in liquidity late last year. So it just takes a while for these crypto native assets. I do think RWAs coming on chain, like tokenized equities, indices, they're very useful. They're very good and a huge tailwind for options too. For that reason, like perps are again useful, but you can only do so much with them. With options, now we can generate yield on any equity or anything that comes on chain and gets tokenized. And those markets are big. We just take them on and make them international by default with Derive's infrastructure. I think when those flows start to get going in earnest at scale, people will start to see how big the market is. I think it just takes time. It's not something that's easy. It's on the flip side, once you do build that market, you do get those big sellers coming in. They're very slow to move. They're very institutional. So the network effects are very strong. Whereas in perps, Hyperliquid's done a good job of retaining the liquidity, but it is certainly a lot more easier to spin up like a perp dex than it is an options dex for a variety of reasons. So I think the market can become actually really, really big. I think there are a couple of big tailwinds around RWAs, and then also with some of the more agentic, like AI style trading, kind of first trading outfits. But yeah, it's one for someone, people who are patient.
So do you have any plans to like onboard more maybe tokenized stocks? Right now you have some crypto options, but yeah, I just wanted to ask about that.
Yeah, we certainly do. We're working on these sorts of things at the moment. We launched gold markets for the first time like 2 or 3 weeks ago. those are starting to really take off. It's been fun. So you can trade gold options on Derive. And it's kind of our first foray into RWAs. Then we'll have commodities, indices, and then eventually single name equities down the line.
Okay, so let's get more deeper for Derive's market position and maybe recent growth drivers and all the stats that you have got. So Derive's recent growth has been particularly notable. Like, my understanding is that the protocol currently accounts for approximately 90% of on-chain options trading volume. So what have been the key factors driving this growth?
Yeah, I think it's mainly the culmination of like market timing and 5 years of work on the product. It's not a product, as I said, that you can kind of spin up in a day, because when you build an options market, there's liquidity that you need for hundreds, thousands of strikes and expiry combinations for all of the different assets put together, plus Perpetuals liquidity to hedge the options. So we have both options and perps on Derive, and they're used in margin together. Like, that just takes a lot of time to build up those markets, to get the liquidity, to have all of the 1,000 small details that in the product that are required to make it work. And so I think for us, we finally got to that level of maturity in this year. Our relationships as well with market makers, with traders in the space, with teams in the space. We've been building those for years and years, and those are kind of starting to pay off too. And at the same time, the market changed almost in our favor. I think the 10-10, like October 10 mass liquidation last year, I think showed a lot of people the weaknesses of perps, and also killed a lot of the yield sources in crypto. The basis trade was already on the decline, but that was the sort of nail in the coffin for the basis trade. And then you have a lot of the other tokens in the space that were launching at $1 billion or 2 billion FTV with $0 in revenue and no fundamentals and no path to that. And a lot of funds and teams were making yield and money off of those tokens when they launched. So all of that went to zero, and that actually makes options in the style of trades that we were talking about earlier like a lot more attractive relatively. And I think before that, the product is kind of crowded out by a lot of this easy yield that was on offer in the space. On-chain, I think in the here and now is about, that self-custody. We have lower fees. We have a wider variety of markets. It's just competitive, kind of top to bottom. In the long term, I think the exponential upside to the size of the market is just way bigger than off-chain, as I said, because of the ability to compose and build with these options products, and then also hook natively into the agentic trading that's starting to take off on-chain as well.
Okay, so as you guys right now are on Hyperliquid, so was there a specific moment or metric where the team said we need to be on Hyperliquid right now? So who made that call?
Yeah, I mean, we always try and be aggressive with listings, and it definitely seemed like Hyperliquid was, as I said, starting to fit that criteria of, okay, you have this big holder base that's like on-chain native, and they are, there's really not much else you can do with your hype. You can stake it, so we do have K-Hype as collateral, but that staking yield is like 1% or 1.5%. It's just not very high. Once you do that, there's really nothing else you can do. So for us, we thought we could, potentially get into the market by starting to offer their hype, hype holders yield strategies and like ways to outcompete and like earn yield on their hype with Derive. And so it was kind of like almost like a team-wide realization, and we were pushing for it for 2-3 weeks, and it takes time. I think we launched it and it didn't really have much traction for a month or two, and then people started to discover it, and it really started to take off, early this year.
So which options products or strategies are hype holders using most actively on Derive? So beyond seeking speculative returns, are you also seeing some meaningful demand for hedging or enhancing the yield on their existing holdings on hype?
I think very clearly the dominant flow in hype that we see is people generating yield. Not so much hedging. We don't see a ton of that yet. I think hype holders are fairly risk-seeking this early, but we do see both to the upside, to people selling calls on their hype and generating. So like we call that like, overriding or covered calls. We see a lot of that, but actually I think the biggest flow that we see is users selling downside. So they sell puts, effectively selling insurance on hype. Often they'll pick strikes. So, hype's at $55, $56. They'll pick strikes like 20% down, so like $45 to $40 range. And as I said, you can earn some pretty hefty premiums on that historically. And you can kind of see that that's been the demand because of how the implied volatility has tracked. And so that is kind of like a measure of implied volatility, is this term that sort of measures the expected, how volatile an asset's going to be, into the future. And it's based on like, kind of the relative supply and demand for options. On one side, the supply is people generating yield. The demand is people like using it to speculate and betting that it's going to be volatile. When we open the markets, the hype implied volatility was like 100%, which implies like it's going to move on average 5% up or down every single day. That's the expected value of the move of hype. Now, because of all the yield sellers, it's come down to like 55% or 60%, which has been a huge crush in the implied volatility and also the yields on offer, because we've just seen so much of that flow being one way. And I think it's had, somewhat vol dampening effect on hype more generally as these options trades have gotten bigger and bigger across the industry. So, predominantly yield generation. I think now that like the implied vol is getting lower and lower, it makes buying options cheaper. So I think we might start to see more speculative trades coming through towards the end of this year.
I'm curious, what's the single largest options position maybe a hyperliquid holder has opened on Derive? So.
Oh yeah, that's a good question. I think we had once, there was like a 30, 40, like a 40 or $50 million position where this is actually interesting. It's not yield generation. We had someone buying a call spread. So they were buying, I think at the time hype was $37, $38. And they were buying the 40 strike call and then selling the 50 strike call. So what they were betting on was that hype would rally to $50 as cheaply as possible. I think they won to that, not like the full thing. I think it went to like $45, $46. But that was a big trade in one clip. And it was successful. So they were, getting kind of leverage upside on the hype price with options.
That's crazy amount of money. And let's go next to Derive version 3. So Derive v3 is expected to launch in mid-September and has been described as the biggest upgrade in the protocol's history. So could you walk us through what's new in Derive v3 and when a regular user logs in after launch, what's the difference they'll notice?
Yeah, Derive v3 is kind of the end game of what we've been trying to build this whole time, which is effectively like this idea of the infinite payoff factory. You can take calls and puts, spot, borrow land, and perps all in the same risk engine for all of the assets that you can trade. So not just crypto, but RWAs as well, and manufacture, an enormous range of structures for speculation, yield generation, and hedging. So with v3, we have a few new, big features for users directly. So one of them being you can borrow land in two ways. So you can not just borrow, like at the moment on Derive, you can post collateral like Bitcoin and borrow USDC against it. In Derive v3, you can post Bitcoin and post USDC and borrow Bitcoin against it, which creates like a two-way spot market. Creates a lot of different potential payoff loops you can do. You should expect to see more markets. We're going to be able to launch more markets more quickly with v3. And then I think more broadly, the vaults infrastructure is what's really going to change the most. So people running quantitative investment strategies, people building structured products, like that goes from 2-3 months of integration time at the moment on Derive v2 to a couple of clicks, for certain cases. So people can deploy it in themselves with the UI. that's going to open up a whole bunch of strategies for users more broadly. They can verify the performance. They can get guarantees around like how a specific strategy is going to get executed in a trustless way. And I think it's really, really exciting, and kind of like helps translate those, kind of option style trades and payoffs into something more broadly accessible. So to sum it up, more markets more quickly, way more vaults, as well as like, kind of exciting new like margin upgrades to the risk engine, which should show up in more capital efficiency, lower fees, and lower spreads as well.
We also have to talk about how people are actually using Derive and what you're seeing from users. Which option strategies are currently most popular among the Derive users? And do you personally have a favorite strategy in this kind of market?
Yeah. Well, this market's been really slow, as I'm sure you guys have felt, in the last like 3, 4, 5 months. I think things have been like Bitcoin has kind of been ranging in like kind of around this bottom of 60K or so. ETH has dipped down and kind of rallied back. But in these ranging markets, obviously like the most common strategy that people tend to take is yield generation. So betting like that the ranging is going to continue and like selling big moves to the upside or to the downside on like a 1 to 2 month time frame. Not financial advice, by the way, but it's something that I like to do is kind of make that trade and then also cap the loss. So again, that's kind of like a call spread or a put spread. So you're selling an option. So Bitcoin's at 63K. Maybe you sell the 70,000 strike call, which is betting it won't go above 70K, and then you buy back the 75,000 strike call. So you're capturing yield, less yield than you would if you didn't buy back the 75,000 strike call, but it means it caps your max loss on that spread to $5,000 a Bitcoin, which is, essentially just way less. It's, 6-7% of your Bitcoin versus, potentially losing the whole thing if it rallies too much. So I like doing that. It allows you to generate, small amounts of yield and keep things ticking along, and be patient, and kind of be productive during these periods. And a lot of our users are doing that too, both with, I think predominantly with Hype actually, and then also with ETH and Bitcoin.
Yeah, and let me flip the question around a little bit. What's the most common way beginners lose money on options, and what's the one strategy you tell them to start with instead?
Yeah, I think the most common way people come in and they just start buying short dated options really quickly and, not having strong opinions, just wanting to kind of like get some leverage. And options are good for that. But I think I would advise people, and not financial advice generally, but like options are a very useful tool if you have a specific trading opinion. And people should use them as a tool. Like if you have an existing opinion, like I think there's a catalyst for Ethereum in the next 2 weeks. Think about like where you think that's going to move and then express that and find the right bet, with options. And AI is good to help translate this. Find the right trade to make as opposed to like staring at the options board and then like trying to come up with any reason to trade that you can. Like start with the thesis and then like back solve for how you express it. And I would say a lot of the time options are the best way to express a certain thesis you might have in the markets precisely. And that means you can make more money with potentially less downside than you could expressing it with like a perpetual or like a perp trade, for example. So I would just say like start with your thesis and work backwards. Try and make sure that like you're aware of the spreads that you're paying and whatnot. Don't overtrade and like go backwards and forwards too much either. Like have an opinion, stick to the thesis, and like execute in a disciplined way.
Yeah, and by the way, congratulations on Derive getting listed on Upbit and Bitsum recently. That was obviously a pretty big moment, especially for Korean community. And Derive wasn't involved in either decisions. Why do you think Derive was listed?
Yeah, thank you. And yeah, we appreciate getting listed on Bitsum and Upbit. We really didn't have any communication with those teams or any hand in that. I think probably if I had to guess, and I have no idea, my guess is kind of as good as yours. We've had a token that's been live for almost 5 years now in the market. We've been pretty consistent as a team in terms of building towards this moment and like dogged. and disciplined. And I think at some point that just starts to cut through over a long enough time horizon. And I think, people can see it based on kind of our longevity and sticking around, whereas there's been a lot of teams that have kind of come and gone in that time. And so, yeah, I would just say maybe it's related to that. I don't know for sure, but we're appreciative of it nonetheless.
Yeah, and what are the key priority Derive will focus on in 2026?
Yeah, I think the main things are RWAs, going to market, and then having structured products and integrations live and built on top of Derive, creating flow and creating network effects. If we can do those two things, we will start to really aggressively set ourselves up well for 2027 and beyond. It will be very hard to replicate and kind of follow up off the back of that for other teams.
Yeah, and give us one number you internally targeting for 2026, like users, volume, anything, something we can come back to and check in a year.
Yeah, I mean, I can't project, but our internal, I'm shooting for us to 10x our volumes, and I think we can do it in the next, 9 months, 6 to 9 months. I think it's very doable. We've already done a big growth in volume since November last year, and I think we can do it again. It will take a lot to go right, execution as well as a little bit of luck, but I back us to do it.
Yeah, we cleared all the questions, and we will see you at the KBW.
Yeah, 100%. I'll be there. Very much looking forward to being back in Korea.
Yeah, thanks for taking the time today.
Thank you, guys.
Thank you. I'll do the closing mint, and then maybe you can sum up the podcast. 네, 오늘은 온체인 시장에서 옵션 시장을 만들어가고 있는 디라이브에 대해서 알아보았는데요. 유익한 시간 되셨으면 좋았을 것 같습니다. 오늘은 저 블록미디어 연구원인 정윤재, 황효준님과 함께 했고요. 디라이브의 닉에게도 여기 나와주셔서 정말 감사합니다. 블록미디어 시청자 여러분 봐주셔서 감사드리고 다음에도 또 좋은 영상으로 만나 뵙도록 하겠습니다. 감사합니다.